Hey everyone, it's Sarah Breck here, your Boise real estate insider. Today we're diving into a hot topic that's been quietly shaping the housing market: mortgage forbearance. Sounds fancy, right? But really, it's just a fancy word for timeout on your mortgage payments when life throws you a curveball. So what is it? How does it work? And why does it matter if you're buying or selling a home here in Boise? Stick around because I'm breaking it all down. Section 1, what is mortgage forbearance? All right, so mortgage forbearance is basically when a homeowner asks their lender, hey, can I hit pause on my payments for a bit? Maybe you lost your job, had a health scare, or your house took a beating from Mother Nature. Forbearance lets you temporarily reduce or even stop your mortgage payments for a set period, usually up to a year. The big spotlight on this came from COVID-19 pandemic. Thanks to the CARES Act, shout out to Congress for that one, nearly 8 million homeowners got the chance to put their mortgage on hold without penalties. It was a lifeline for many, avoiding the nightmare of foreclosure. Fast forward to today, forbearance cases have dropped like my patience for spam calls. As of March 2025, only about 180,000 homeowners remain in forbearance. That's just 0.36% of all mortgages, according to the Mortgage Bankers Association. So while it's not as headline-grabbing as it once was, forbearance still plays an important role for folks facing temporary hardships. Section 2, who qualifies and how to apply. Now, not everyone gets a free pass on their mortgage. To qualify, you typically need to show you're going through a short-term setback. Stuff like job loss, medical emergencies, natural disasters, divorce or separation. And here's the kicker, you have to ask your lender before you stop paying. Otherwise, you might mess up your credit and get denied. If you qualify, you're not off the hook forever. Forbearance isn't a loan forgiveness, it's a payment delay. At the end of your pause, you'll need to catch up, either in one lump sum, installments, or by extending your loan term. Section 3, types of forbearance and repayment options. Forbearance isn't a one-size-fits-all deal. Different lenders and government programs have their own flavor. For example, Fannie Mae and Freddie Mac offer disaster-related forbearance that pauses fees and legal actions. During COVID, some folks got up to 18 months to catch their breath. Then, when the pause ended, many had options like deferring payments to the loan end or taking out a second loan. Payment plans include reinstatement, pay all owned amounts in one go, a big gulp but done. Installments, spread it out over time with higher monthly payments. Deferral, add missed payments to the end of your loan, but beware, extra interest can sneak in. Loan modification, if troubles are long-term, lenders might tweak your interest rate or loan term. If all else fails, selling your home could be an option, especially if you have equity to cover the debt. Section 4, forbearance versus deferment. What's the difference? Quick FYI, mortgage forbearance is a short-term pause with a repayment plan. Mortgage deferment is a longer pause, sometimes up to 36 months, with payment pushed to the end or when you sell or refinance. Sometimes deferment is part of the exit plan from forbearance. Section 5, credit impact and buyer confidence. Worried about your credit score? Good news. Experience says forbearance doesn't usually tank your score if you will follow the repayment plan. It's way better than foreclosure, which can haunt your credit like an ex who won't stop texting. Now for buyers, if you spot a home where the owner was in forbearance, don't freak out. It can cause some hesitation in the market, sure. Buyers might worry about the property's condition or neighborhood stability, but a savvy real estate agent will help you navigate that. Get the right inspections and understand local trends so you can feel confident making an offer. Section 6, how forbearance impacts the housing market. So why should you care if your neighbor paused their mortgage? Forbearance actually helped stabilize the market during COVID. Experts say it prevented a flood of foreclosures, like 500,000 avoided in late 2020 alone, which helped keep home prices from tanking. On the flip side, homeowners in forbearance who can't recover might sell, adding to the inventory, sometimes at a discount, which can shift prices. And if too many folks in the market are in forbearance, buyers might get cold feet, slowing sales and nudging prices down. Section 7, what this means for Boise sellers and buyers. If you're selling and in forbearance, be upfront with your agent. Your payoff could be higher because of added fees or interest. We'll crunch the numbers together so you don't get sticker shock at closing. If your home's value covers the loan plus forbearance repayment, selling might be a smart move to avoid foreclosure. If not, we can explore other solutions like short sales or loan workouts. For buyers in Boise, a bit of forbearance in the local market isn't a red flag. It's a sign we all need to stay informed and work with trusted pros. So So there you have it, mortgage forbearance in a nutshell. It's a tool designed to give homeowners breathing room during tough times without crashing the housing market. The pandemic showed us how important these programs can be to keep people in their homes and avoid the chaos of mass foreclosures. If you're facing financial challenges, reach out to your lender before missing payments. And if you're buying or selling, lean on a knowledgeable real estate agent who understands how forbearance fits into the bigger picture. Want to learn more about Boise market and have questions? Drop them in the comments or send me a message. Don't forget to like, subscribe, and hit that bell so you never miss local real estate insights. Thanks for watching. Catch you next time.